Good morning. Welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Monday, the 14th of September, 2009. It's 11:30 a.m. Eastern Daylight Time. It's 4:30 p.m. down in Cornwall, where CATEX Managing Director Tom Bailey and his lovely wife Louise is vacationing. It's also 12:30 in Bermuda, and in Mexico City it's 10:30 a.m. If you need to reach us during the broadcast, you can phone in toll-free at 1-866-67-CATEX. Overseas, our AOL Instant Mail address is CATEX-TV. Today at 10 p.m. this evening in the United States, a new era in broadcast free television will begin. Jay Leno, the comedian, has switched his show time from 11:30 p.m. until 10 p.m., 5 nights a week. This is a return now for the first time in memory to a variety/comedy show and primetime hours. The network has been hyping this beyond compare. They've spent $10 million on a budget for this. Mr. Leno is expected to have gangbuster ratings tonight. So we'll see what happens. It's going to be very interesting. I may even stay up. Leno was impossible to watch for anybody who worked at 11:35 p.m. Maybe this will be a little bit better. Now we'll go to our main news, the important news. There's a big trade war brewing. Late Friday night, the United States slapped a tariff on Chinese tires. Here's a picture of Chinese tires. These are tires in China. Beijing responded today by filing a complaint with the World Trade Organization. The conflict is a big irritant as Washington and China prepare for a group of 20 leading economies meeting in Pittsburgh on the 24th of September. The Chinese complaint to the World Trade Organization begins a 60-day WTO process in which both sides try to resolve their dispute through negotiations. If that doesn't work, China can request that the WTO investigate and rule on the case. The Chinese are very exercised about this and vitriolically have been complaining about it on their websites and in public announcements all weekend. The urgency that China attaches to maintaining exports amid slumping global demand is evident. President Obama approved the higher duties to slow the rapid growth of U.S. imports of Chinese-made tires because of the loss of thousands of American jobs. The tariff schedule is as follows. 35% in the first year, 30% in the second year, and 25% in the third year. The United Steelworkers Union brought the case in April and said that more than 5,000 tire workers in the U.S. have lost their jobs since 2004 as Chinese tires flooded the U.S. markets. The Chinese in response said that they're investigating complaints that American auto and chicken products are being dumped in China or benefit from subsidies. China said that the U.S. imports have dealt a blow to domestic manufacturers. Well, this will be very interesting, and we'll see who this hurts most. I can assure you it will not be the United States. Here's some interesting news. Federal prosecutors are capping a year-and-a-half investigation. They're preparing to convene a grand jury in Brooklyn, New York. They're going to consider the indictment of this man. This is Joseph Cassano. He's photographed outside of his London home in Belgravia. He's a former senior American International Group executive who has been blamed, rightly or wrongly, for almost bringing down the insurer a year ago. He was the head of AIG Financial Products. He's being investigated for securities fraud because he allegedly may have misled investors by overstating the value of mortgage-related contracts and then failing to disclose material facts about them to AIG's outside auditor. The possible case against Cassano and others could rely partly on tape recordings of 2007 phone calls involving AIG Financial Products employees who discussed the value of derivatives trades known as credit default swaps. Cassano has denied wrongdoing. The tape recordings include discussions by Cassano's group about the impact of the deteriorating mortgage market on AIG's credit default swaps. Prosecutors could try to contrast these calls with reassuring statements Cassano made publicly about the same time, telling investors that any possible losses would be limited. If the case is filed, one potential witness could be Mr. Joseph St. Denis. St. Denis is a former internal auditor at AIG. He told the congressional committee last year that Mr. Cassano said he had, quote, deliberately excluded Mr. Dennis from evaluating the credit default swaps, quote, because I, Cassano, was concerned that you would pollute the process. A lawyer from Mr. St. Dennis declined to comment. Tomorrow up in Hartford, Connecticut, the bell will toll yet again. This time it'll be for Richard Napier. He's going to be sentenced for his role in the accounting scandal that cost shareholders of AIG more than $500 million. Napier pleaded guilty in 2005 to conspiracy to commit securities fraud. He became an important government witness in the case, which did lead to the convictions of 5 top executives. The deal, of course, that prosecutors complained about was that AIG paid Gen Re in a secret deal to take out reinsurance policies with AIG. Prosecutors say the bogus deal made it look like Gen Re was going to pay AIG $500 million in premiums, when in reality Gen Re would pay no premiums and actually receive $5 million from AIG. That sentence will be tomorrow. Judge Christopher Droney, federal court in Hartford, will impose it. Validus made some news in Bermuda. They've appointed Charles Cooper as head of North American Property Catastrophe Reinsurance Underwriting. Conan Ward, the CEO of Validus, made the announcement welcoming Mr. Cooper with his 14 years of international underwriting experience. Prior to his appointment, Cooper served as senior VP at XL Re. He's a Bermudian citizen. He has an MBA from Columbia University and an undergraduate degree from the University of Colorado. Stock market is down about 7 points right now. We'll go to a word from our sponsors.
Every day, the world wakes up and goes to work, pursuing the unique opportunities that lead the global economy forward. The complexity and close connectivity of today's global marketplace is a true modern miracle that can create unparalleled success. But it takes confidence, passion, innovation, and understanding.
Enabling opportunity.
Protecting capital.
Engineering innovation.
Investing in your future.
Ensuring continuity.
Finding the right balance.
It takes Aon.
This story was on the wires this morning. It had to be read several times, and I still don't quite get it. American International Group, the insurer selling assets to repay a government loan, of course, was cut to, quote, underperform by Wells Fargo because of the company's reliance on the federal bailout. Here's the statement from Wells Fargo's John Hall late Friday. Absent government support, AIG would be out of business. The U.S. government owns almost 80% of AIG. The rest of us are just along for the ride. He previously rated AIG stock as, quote, market perform. Hall now follows Sanford Bernstein and Thomas Gallagher of Credit Suisse Group in advising investors to sell AIG shares. The insurer's obligations, of course, are tied to the $182 billion bailout, and they exceed the market value of the company's business. Hall said, a reasonable case could be made that the company has virtually no tangible book value. Hello, where's he been? Here's an interesting story coming from the Royal Gazette in Bermuda this morning by our friend Jonathan Kent. 15 Bermuda-based companies appear in the world's top 35 reinsurers. This is according to AM Best, gross written premiums last year. Bermuda's biggest writer of reinsurance in 2008 was Partner Re, which amassed premiums of slightly over $4 billion and ranked 9th globally. And this result does not even take into account Partner's acquisition of Paris Re, which itself